An angel investor is typically someone who invests early stage where you can't get bank financing, you can't get debt financing typically. It's high risk, needs to be high return, high reward. But the big difference between like an angel investor and like private equity or a venture capitalist, shall we say, a venture capitalist is that angel investors typically come in with much smaller amounts, much earlier on deals. And of course, there's very few deals even in Anchorage that can draw venture capital, because that takes a big idea with huge potential, because an angel investor is typically investing his own money or her own money. Venture capital are people who amass lots of money from other people, and so they have lots more to invest. But the biggest thing that the angel investors bring that is different than, like, say, what a bank can bring or something like that, is they bring the mentorship. These are people that like to mentor. These are people that like to coach. These are people that like to draw upon their experience and wisdom, shall we say, from years in business. And so that's the big difference. And we don't get paid for that. We hope that somehow we get rewarded at the time of exit, because we have incentive to add value to the company because we're also investors and that kind of thing. So that's the big difference. So for many startups, the only source of capital is, the first one we've all heard about is the 3 F's: friends, family, and fools. Is where you go first, but oftentimes that either is not enough or it's not available. Then what you have to do is you really have to look at putting together a pitch, and normally angel investors are who you look towards first. I'm looking for obviously somebody who has done their homework, who has done the due diligence, who has validated as many assumptions as they can, has looked at all their costs, that they can, and has really talked to lots of customers or whoever is going to buy their product or service, and also has looked at competition, something we haven't talked about much. But if the market is saturated, or if they have unique something or other, bells and whistles that they're going to bring, even though they have competition, that has to be convincing. So a lot of what I'm saying is, have you done your homework in all the facets? Your costs, your demand side, your customer side. Can you sell the product? What is the competition doing? What are you bringing that's unique and special? One of the biggest things that investors are looking for, what I look for is, I look for a good idea, but to me, the entrepreneur do they have the chops to pull this off? Do they have the grit? Do they have the drive? Do they have all the characteristics to pull this off? That's more important to most investors than a really sexy or great idea. And of course, the ones that most people are interested in is if you can combine the two. Remember all this, they have to have the grit, the drive, and all that kind of thing, but they also have to be coachable, because otherwise you can't bring, if you, in fact, you are smart money, you can't bring that to bear if they're not willing to listen to you and they're not coachable. The other thing I want to mention that I think is important, besides having curiosity, and of course you need to have tenacity, you need to have willpower, you need to have all those, call it what you want, we all have our definition of it. To me, the other thing that you're looking for is the ability to adapt, because oftentimes when you start a business, you think your market is here selling this product, when in fact it's over here selling something slightly different. And you need to be able to pivot and adapt and adjust. You're excited about your idea, and it's important to show that excitement, but not too much, because most investors, there are not a lot of investors in this space, early stage, and they get pitched all the time, and it all starts sounding like, repetition. Oh yeah, you got the greatest idea since sliced bread. Yeah. You're going to be able, but so it's all about differentiating yourself. I think. How can you make yourself sound like you have something different and special to bring to the table? But you need to be able to do that in 5-10 minutes, because an investor doesn't want to hear why your idea is. If your idea is better than everybody else's, you have to be very, very compelling, because these guys we've heard it all before, and we know usually by the rule of hard knocks and long lives that there aren't very many shortcuts, and that's what I hear a lot about. Well, I'm going to get from A to B, and I'm going to get from A to D, and I'm going to bypass B and C because I'm smarter than everybody else. Well, yeah, right. That kind of thing. So be real, be confident, without obviously being arrogant, showing investors how you're going to be addressing a pain point. Because what that means is that, or showing you've got contracts in place or agreements in place or whatever else, because ultimately at the end of the day, if you don't have customers who are willing to pay you money for your product or service, you're not going to really get any investors interested. You have a product, you have a skill, you have something that and that's your supply. That's what an entrepreneur has to supply, and they try to build a business around that. And that may be fine, but the first question should be, is there a demand? So because if you don't have a demand, you have to build it. I think what's interesting about the West is that there are probably interesting pain points because the markets aren't saturated as they are in the big cities. And so I think there's interesting opportunities to try to look around and say, are there pain points, or is there something unique about my community that I can supply? Because a pain point issue would be something I want to supply the village with a service or product. The other way of looking at it possibly is that you have access to a unique product that nobody else does. And we see this a lot, I think, with native artists. They have access to bones and fur and lots of interesting things to make art out of that other people don't. And then in that case, you're looking to sell your product outside the village. The one thing we talked about a little bit is there's always markets. There may be something unique to your village or unique to your location or your particular area may have an asset that no other area has. It's sort of like taking inventory of your strengths and weaknesses, not only as an entrepreneur, but also as a place. Do you have some unique product or service that you have access to or and then you can actually, in fact, export back? Like I said, there's sort of two ways. I think an entrepreneur in the villages have to look at two things. Is there a supplier service I can sell locally, knowing that the market is very small, and so the profit margins are going to have to be fairly high because your marketplace is so small in order to justify it, or is there a product that I can, in fact, mine here, if you will, and then send outside where the marketplace is huge, but the competition is also, and so, this concept about sitting back and taking a big, broad picture of your situation, your skill set, and taking inventory of looking at what are the unique things that you have access to, either through family members or because of your geographic location or whatever else. The buzz nowadays is being a nicheaholic is a term. And that's basically what that means, is that find a unique niche. Don't try to be too many things to too many people, but try to find a niche and be the very best you can be in that niche. Be the very best player in that niche. And that will oftentimes serve you well. There's a logic out now that business plans are passé, you don't need a business plan. And that may be true in Silicon Valley, but I think one of the things people forget about going through the effort is that you're forced to look at expenses. And I think the tendency is when you want to start a business to be filled with euphoria and confidence, and otherwise you wouldn't even be considering this if you weren't a confident person. But this is the trap that a lot of early stage entrepreneurs get into, is they make assumptions and they don't validate the assumptions. And as a sort of a potential investor, what I end up doing is I end up going through that stage with them saying, okay, what are your unvalidated assumptions? What are you assuming that you're just assuming? You don't really know. You think if we do A, then B will occur. Well, maybe, maybe not. I still have my original, my pro forma, sheet that I penciled in and erased and penciled in and erased and did all that kind of stuff. Because what it does is it forces you to look at all your expenses. And it helps you identify what they all are. Because a lot of the expenses, you have a tendency to be over-optimistic and say, oh, well, I won't need to pay for this, or this will be X, when in fact it will be 2X, so it's a rigorous exercise that I think any entrepreneur needs to go through. If an entrepreneur is not open to what they don't know, you're probably not going to be successful. So do a business plan.